All right, guys. So let's start this off with a story. Now, in Greek mythology, there is a legendary conflict called the Trojan War. Now, Troy was a massive war city that the Greeks wanted desperately to capture, but they just couldn't take it down. They sent waves of troops and they laid siege to the city for 10 long years, but the city didn't break. Finally, the Greeks managed to trick the Trojans by giving them a giant wooden horse. Now it was a deceptive gift, and inside the horse lay Greek soldiers hiding that slowly crept out during the night after it was brought into the city. They then opened the city gates to let in the Greek army, and the city was eventually sacked. Troy was utterly destroyed. The few survivors had to flee while many others were taken as slaves. Now, why did the Trojans even accept the horse in the first place? Well, they thought it was a Greek offering to the goddess Athena and that it would grant them protection if brought into the city. Now, this situation is playing out in today's economy, except this time, the Greeks are being played by the Americans. Troy is the world economy of China, and a Trojan horse in question is USI chips. Now, when Trump decided to allow the sale of H200 chips to Chinese companies, it wasn't an act of altruism. The first reason was to desperately get back some revenue that the US has lost in China. Now, even Trump knew that if this continued, Chinese makers would corner off the US forever. And let's recall what Jensen Huang said at the moment. We are 100% out of China. And so China is 0% if we went from 95% market share to 0%. And so I can't imagine any policymaker thinking that that's a good idea, that whatever policy we implemented caused America to lose one of the largest markets in the world to 0%. But anyhow, in all of our forecasts, if there are any shareholders out there, all of our forecasts we're assuming 0-0 for China. Now, this is just a financial incentive. Getting more money is important to keep the bubble going. When you have Nvidia feeding other companies money and tech giants dependent on chips from Jensen, the money spigot can't stop. But the real agenda is to get China to drop the guard and rely on American chips, the Trojan horse. Now, the whole idea is to make Chinese companies dependent on the Nvidia stack and architecture, and the chips are big lure. Now, the H200 was released last year, but it's still being used today for frontier AI. The H200 Hopper chips are still being utilized to train language models for cutting-edge solutions. Experts believe it will continue being useful throughout 2026. After that, the Blackwell or the Rubin series of chips will take over. So, the US has about a year to get China hooked on American chips. Now, the plan, of course, is to lock Chinese tech giants into the Nvidia ecosystem. And once you get in, it's like Hotel California. You can't get out. Now, the Nvidia stack is really deadly. CUDA, which is the Nvidia programming model, helps developers maximize the power of AI chips to get the most juice out of the squeeze, but then you get access to the app libraries and you start building applications and frameworks on it. Then you develop solutions in the real world for consumers and industries, and before you know it, your whole life is built on the Nvidia stack. Now, should that happen, all Trump needs to do is to shut off future chips to China. Things would then grind to a halt. Now, Chinese applications and AI models would suddenly lag behind the Americans. This is the real risk China faces. Even if there are no backdoors, the big threat is China falling behind thanks to complacency. Half of the world's AI developers are in China, and if the US doesn't step in, it's literally game over. Once Chinese technology catches up, once Huawei and Capricorn starts mass-producing affordable chips, the world will make a dramatic switch. Well, the important thing about China is both the business is important, but strategically, it's even more important that the American technology stack is what AI developers around the world builds on. If we want the American technology stack to win around the world, then giving up 50% of the world's AI researchers is not sensible. And so that's the most important part strategically, where AI developers develop their technology. It will run best on that technology. And it's why Trump had to drop the Trojan horse. That's why out of the blue, China was allowed to access the H200 chip. But China itself, they know the inherent danger of relying on just American chips. And now the US is realizing China is rejecting Trump's olive branch. Buying the H200 is a long-term trap Beijing just wants to avoid. Now, USAI's David Sachs just saw the writing on the wall. China is rejecting the H200 and our foxing US strategy. The plan to impose technology dependence isn't going to work. China wants semiconductor independence. They want to make advanced chips themselves because the stakes are just so high. And to accomplish this, China is mobilizing their entire financial system to make it happen. Now, China is going to unleash a wave of incentives to support local chip makers. It will likely go beyond just subsidies to the companies. Beijing could very well subsidize the purchase of domestic chips to sweeten the deal. There is a big reason why Mo Threats, the Chinese AI chip designer, had a massive IPO jump. Just a day after they listed their stock, its price jumped by over 400%. The company itself is going to release their own architecture to rival Nvidia. Progress is being made in leaps and bounds. There's a reason why investors are jumping on board because the Chinese government is going to support their industry to burn down the US Trojan horse. Now, compared to the US, China still has room to stimulate their economy without much blowback. Inflation in China is nearly non-existent. In fact, they are bouncing between deflation and inflation. Now, in 2026, Chinese bond yields are predicted to fall by at least 25 basis points. This puts their 10-year Bing cost at 1.6% or even lower. This is the prediction by HSBC Bank. According to Trojan, the fall in yields will be even more severe. It will drop to 1.5%. And just like the US economy, when long-term yields drop, this allows companies to borrow money more cheaply. Money becomes cheaper to access. There is a reason why China is slashing rates at this point in time. It's not just enough to give subsidies. Beijing wants local Chinese tech giants to expand operations and to buy more chips in the process. And because inflation is just so low, there is no risk of a crisis. In fact, by dropping rates, there is a chance the greater economy grows as well. But the real agenda is to really get the tech giants to expand aggressively. Now, Alibaba, for example, issued a record $3.2 billion in bonds in September this year. Last year, they issued $17 billion in RMB debt as well for AI expansion. Now, Tencent raised over $1.2 billion worth in dim sum bonds as well, and they are about to launch more debt sales in the local currency. BU, another tech giant, raised 4.4 billion RMB from dim sum bonds in September. The AI investment boom is truly starting in China. Beijing wants Chinese data centers to be powered by Chinese chips. That is the end goal. And because the US is trapped financially, China has decided to fire up their finance engine. Let's make borrowing cheaper and funnel domestic money into our tech giants. This is the same playbook they used for electric vehicles 5 years back. China doesn't want money loaned to real estate companies anymore. And that's why they allowed that bubble to deflate. All the focus is placed on AI technology and semiconductors to compete with the Americans. China's going to pour up to $70 billion in cheap sector incentives. This is where their trade surplus and their budget is flowing to. And let's remember, a dollar in China stretches way further than a dollar in the US. Now, labor's cheaper, power costs are anywhere between 33 to 50% cheaper, and maybe even more. And because China is the manufacturing hub in the world, making everything from the steel frames to wirings of data centers are way cheaper. So this $70 billion injection will have a punching power of $140 billion, or maybe even $210 billion, triple the intensity versus the US. Now for Trump's economy, there will be big consequences from this. Now, chief of which is the unstable AI bubble. Without Chinese revenue, the entire US AI ecosystem could get destabilized. So either US tech has to slow down or triple down or raising even more expensive debt. This is a map of US AI funding relationships. It's basically a map of how interconnected the entire ecosystem is. At the heart of the mess is Oracle and Nvidia. They are facing huge pressures. Now, Oracle is spending too much while earning too little. While Nvidia's future revenue is going to face a war without China, and it's this musical chess type of funding that is most disturbing. If one of the big dominoes like Nvidia starts to shake, suddenly a lot of funding across the ecosystem could dry up. China's throwing a spanner into the works. The US has the lead in AI and semiconductors, but they are heavily constrained when it comes to borrowing. China simply isn't. Now, if the US manages to achieve AGI or artificial general intelligence in the next few years, then yes, it's a wrap. Now, at that point, artificial intelligence would have overtaken human capabilities and even start to self-evolve. US AI will take a tremendous leap ahead, and every country will likely use it no matter the cost, and things would really get dystopian at that point. But it's a really big gamble to take. The longer the AI race drags on, the longer the chip war continues, the more the balance of power swings to China. And it all has to do with the lack of US energy. By 2033, US power capacity could hit a shortfall of 175 gigawatt. There won't be enough power for all the data centers, factories, and EVs. All these would overwhelm existing capacity and just drain emergency reserves. We must assume that China is well aware of American constraints, and the tariff war isn't doing Trump any favors. It's a big reason why there are so much talks with the Saudis to shift data centers to the Middle East. Power is just too expensive in the US. Now, Jensen accurately points out why energy is the big choke point or bottleneck the US is facing, and it's a wall they are going to face real soon. And if that isn't solved, China will rocket ahead. Given enough time, I think at this point we have to use every form of energy we can. I believe we can't rely on the power grid. We got to build behind the meter. We obviously need power generation systems. There's no question we should try to encourage and try to accelerate nuclear. We need to have energy growth very, very shortly. We're going to keep chasing this. We're going to be completely dedicated to advancing the technology as fast as we can. But the bottom line is we need energy. So China isn't stupid. They understand the race and they've made a clear decision. Now, they could, of course, just import a bunch of H200 chips, but it would be self-defeating. Chinese AI solutions might accelerate suddenly, but funding to the US will help Nvidia out even more. Plus, the dependency on US chips is also a problem on an architectural level. Now, for Beijing, creating their own version of cutting-edge chips is mission critical. It allows them to sanction-proof their own economy because China becomes more useful to the world. Now, secondly, with affordable chips, China can swing global trade away from the dollar. This is probably the end goal. We now have this chip that is on par with the US, but it's 40% cheaper, and all we need to do is to pay in a Chinese RMB, our local currency. But let me know what you think. Will China burn down the Trojan horse? Or is the temptation for Nvidia chips today just too strong to resist? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.